Hello guys, and welcome back to a new video. Today I'm going to show you how I was able to increase my win rate tremendously by using 7 filters that I have extracted by refining my own strategy, right? My strategy focuses heavily on pure market structure and also liquidity sweeps. So liquidity is an important concept in my trading, and if you are a market structure trader or a liquidity trader, this video is going to be really helpful for you, right? So quick refresher about my strategy. All we need is market structure, right? So basically we have a zone right here. Again, a zone is just an expansion leg and then pullback, another, and then an expansion, right? So the zone is this pullback. You can call it a zone, order block, demand or supply, it doesn't matter. Now price comes back to that zone, taps into it once, start trading higher, and then coming back to sweep that first stop, right? We are inside the zone. This is the liquidity sweep that we talked about. And then I look for a market structure shift right here, either in the candles, just like this. This can be called CSS, some call it a change in the state of delivery, whatever you want, or even a market structure shift like this in the lower time frame. So this doesn't matter. Now this strategy right here has a high frequency. You can see it a lot of times during the day. Of course, not all of them works. I use discretion in my trading based on my experience and my long hours of backtesting and reading price. So I always receive messages of people. I tell them what they did wrong, right? So it became repetitive. And instead, I want to make this video to give you all the instances where this strategy might fail. So without any further introductions, let's get started with the filters. So the first one, and we have 7, right? We're going to start from the first one, and I'm going to explain every single one of them to you. And I highly recommend you to go through my previous video. It's a short one, and you can do it by yourself. Whatever strategy you are using, you can come up with filters in order for you to refine it, okay? So let's talk about the first one. Avoid internal sweeps when multiple swings are still in play above or below. What do we mean by that? So basically, if we go back to the previous picture, what I want to see is price liquidates a low and we are in an uptrend, and then fail to close below it, and then continue to the upside. You can see it on every single time frame, every single chart out there, right? It happens all the time. Now, sometimes you won't see only low, you will see multiple ones. Now, between these 3 lows, which one do you think is the best level to look for price to sweep it and then reverse on? Do you think it is this one, or this one? Well, it is obviously this one. First reason is that we can consider this as smooth edges, trend line liquidity, low resistance liquidity, right? Price tend to liquidate all of them, right? Clear everything and then continue to the upside. If we are in an uptrend, and we can consider this as a zone, or this is the end of the previous pullback, price will likely not come back to here. It will liquidate these short-term lows, right, and then reverse from them. Another reason is that if suppose that this is the 1 minute time frame, right? On the 1 minute time frame, we have these 3 lows. If we go to, let's say, the 15-minute time frame, these 3 lows, or this one and this one, is not going to be visible, and the only low that you can see is this one right here. And probably you will see like a down candle here, and another up close candle here, another up close candle here, and you will see this low right here. So this low is a higher time frame low, so it is better to wait for this to get hit, and then the reversal will likely to happen from here, right? Again, these lows, yes, they can offer rejection, but this one is the best one for both higher RR, right? Because if this is the end of the pullback, the next target is these highs right here, and you can get a decent R trades. The second reason is this a higher time frame low, and price will likely to not go below it. So this is the last low to take it before trading to the upside. So first filter, avoid internal sweeps. Now let's move on to the next filter. And this one, you will see it happens several times based on the time frame you are using. So no pullback plays if price hits a zone before reaching your limit. And what do we mean by that? So we know that in an uptrend, bullish zones like this, okay, so bullish zones offer what? The expansion. And then the previous zones will offer the pullbacks. The pullbacks are this one right here. This is a pullback, this is a pullback, and this is a pullback. Previous bearish zones from the previous trend, price will hit those, and then it will offers a pullback from them, right? So suppose here it's gonna be like this. So this is a beautiful example. This is the previous trend. Price sweeps this high right here, and it taps into this zone, the previous zone, right? And then we can see a pullback happened. Now a lot of times what will happen is that price will sweeps this. We have a sweep on liquidity, we tapped into a zone, and here you will see something like this, maybe a market structure shift, and price trades to the downside. And what you will not notice is that with this move right here, price already tapped into the previous bullish zone. So this zone, this sweep of liquidity, it fulfilled its purpose to offer the pullback into the previous zone, and you are still looking to ride and wait for price to give you the pullback to this bearish zone to take the trade. And you didn't notice that price already fulfilled its objective here, right? And now we are preparing to another expansion leg, okay? So you can't take a trade right here unless price didn't mitigate this zone right here. So here you had a nice market structure shift, candle structure shift, change in the state of delivery, and this zone still unmitigated, then you can take the trade. But if this happened right here, you don't take the trade, okay? This is the second filter. Let's go now to the third filter, and this one is beautiful. This happens a lot. The frequency of this is very high, especially if you are using the lower time frame. So basically, reject recent sweeps if the direct previous swing is swept and the previous zone is still resisting. So here you can see that we are trading to the downside. We tapped into this bullish zone. Price put in this low, trading to the upside, right? And then sweeping that low. So we traded below it, but we didn't close below it. So only wick right here. This can be considered as a sweep. Some traders will either use a candle structure shift here to look for a trade and take this high, right? To take this high. Or maybe they're just gonna take it to a 1-to-1 here or something like this. But a lot of times the market structure shift will happen like this. So the sweep happened here. This is the market structure shift. Start trading to the upside. We tapped into something here, and you want to take the trade here. So this is very risky because one, this zone is still in place. Price can easily reject from it, right? And just because price swept this low, it doesn't matter, or it doesn't mean that price is going to trade to the upside. Again, still we are facing a resistance with this zone. And just because a market structure shift happened here, it doesn't mean that we're going to trade here to take this high. We can easily mitigate something here, right? Sweep something here inside this down move and then continue to the downside. This happens a lot of times. Now, I'm not going to show examples in this video, but in the next video, I'm going to show plenty of examples for each one, right? I don't want to make this video long, 1 hour or something like that. So today is explaining the filters. Second video or next video, I'm going to go to the examples. Okay, so one more time, turning to the downside, another sweep. and you don't look for buys right here unless we take and close below the previous zone, right? So this is what I put here. Unless we see a break of structure here, then we can consider this as a sweep all liquidity, right? And then we confirm the bullish shift with this here. Now, unlike this, I don't need this right here. I don't need for price to close maybe above this, right? This right here is an old low. Price set it to the upside, mitigated something, right? So it doesn't necessarily have to be like this. Up close candles and then directly down close candles, right? And then I'm going to take my entry immediately here. I don't need for price to close above this high or something like this, okay? So that's a difference. And you can see it from my NQ market reviews. You can see the difference between the two examples, right? So that's the third filter. Moving on to the fourth filter, and this one is gonna increase your win rate, right? Not only your win rate, but also the R's, the higher. If you want to take higher RR, this filter is gonna be for you right here. So skip sweeps seen only on the execution time frame. Now this can be sometimes ignored, especially if we are in a really strong uptrend or a strong downtrend. So what do we mean by that? Let's say, for example, that the price swept this low right here, okay? Swept this low. This low is seen only on the 1 minute, which is the time frame that you execute on, for example, okay? This whole down move is represented with this, okay? And this low right here is seen here. As you can see on the 15 minute, you can see it because it is only a candle low. So it is not a formation of 3 candles. So this is low probability, or at least here you need to be right about the reversal, or else you will get stopped out easily. So for example, if price takes a 1 hour low, okay, 1 hour low, and price takes it here, and you go drop to the 1 minute, right, and you're gonna look for a reversal from it. Even if price takes that low on the 1 hour and it offered only 1 bullish candle after it, 1 bullish hourly candle, again on the 1 minute, you're gonna be able to trade that and take a good, decent RR trade, okay? You don't have to be right about the whole reversal. So price can give a slight rejection on the 1 hour and then continue to the downside, right? So this is like price takes the previous daily low, and when you see that, you drop down to the 1 minute or the 5 minute, and you're gonna try to take a long position. So you don't need for price to trade or take the previous daily high in order for you to capitalize on that move. Price can go only halfway and mitigate something on the upside and then reverses, but on the 1 minute you still get a nice trade. Again, 1 bullish candle on the 1 hour can offer a lot of points on the 1 minute, and I believe that in the previous market review I shared an example of it, right? Or before the previous, I don't remember, but you can check it. Okay, so skip sweeps seen only on the execution time frame. Again, strong momentum, you don't need that. You can take a sweep on a low that is seen only on 1 time frame, on your execution time frame, right? But in choppy condition or price, maybe like today, right? You can check today's price action on NQ. Price wasn't really trending in one direction. So taking trades based on sweeps of lows or highs that are seen also on the higher time frames, that's a really good idea to stick with. Okay, so that's the fourth filter. Moving on to the fifth filter, which is ignore old swings when facing massive moves. Okay, so this is like this one, but not exactly. So here, let's say that we have a downtrend, okay, like this. And this is something that I noticed from my backtesting. So here we have a downtrend, and then we have the shift here. So now there's a good probability the previous zone will offer the pullback, but here this is something else. Here this is not the direct previous downtrend. This is a really old downtrend, right? To the left, old zones, we have a lot of price action here. So price is moving heavily toward the upside, so don't try to reverse it by framing your idea of short based on previous old swings or old zones, right? Price sweeps this high, taps into this zone, and you want to take price to the previous zone like this. So you want to ride the pullback. You don't know that, especially if price is heavily trending. You don't know if the pullback is gonna end here and here and here. You don't know that, and it's likely to end here. Okay, small shallow pullback and then continue to the upside, and you will get rugged in here. It's better to wait for long opportunities. That's the fifth filter. Ignore old swings when facing massive moves. This one is also an important. No sweeps at the edges of a zone. DTFX refers this to as zones at the top of the range or the bottom of the range is likely to get liquidated. So basically, if price takes an all high, right, like this, and then start trading to the downside, and it offers you like a bullish zone right here, and you want to enter from, maybe a sweep, right? Maybe we have a zone here, right? So this is not a good idea to trade from. It is better to wait for price to come back all the way to here, right, to the previous zone, wait for the pullback to happen, and look for something here to enter from, okay? So a lot of times you will get wrecked in here because price is getting ready for a pullback, right? And the pullbacks in an uptrend are not clean at all. So you will get easily rugged in here trying to buy this while we have a lot of unmitigated zones here. So don't buy at the top of the range or at the edges of the zones, whether it is a bullish zone or a bearish zone. Now, moving on to the final filter, and this is also you're going to see it a lot of times. So this is similar to this, but not exactly, and you're going to understand why. So let's go back. So don't find a trend by trying to reverse an expansion before the target is hit. So here, what do we have? Price expanded to upside, right? And while trying to pull back, we have this zone right here, okay? We left the zone, price returned back to it here, okay? Taps into it and continue the pullback. Now the pullback has ended. We have a break of structure here. So now we are in an expansion leg, okay? We are trying, our price is expanding to the upside to where? Where is the next target? This high right here, okay? That's how expansions or uptrends works. The next target is here. So price is trading to the upside, and you see something like this. A market structure shift, first top, second top. You might consider this as a second top. Price fails to close above this beautiful zone here, and you might want to short from here. Ask yourself, why do you want to short from here? Do you want to reverse the whole trend? Do you think that this is a beautiful formation? It looks textbook, so it must work. Or do you want to take price to here, to the next pullback or the next or the previous zone? Okay, so you want to ride the pullback. These all are wrong ideas, okay? You are trying to reverse an expansion leg. An expansion leg. Price finished its pullback and it's trying to trade to the upside, and there is a huge target above you, the logical target, and you want to reverse it from here just because we have this pattern right here. This pattern already did its job to offer and facilitate the pullback. Trying to trade it here, it's a suicide. Believe me, and I have seen it fail a lot of times. Price doesn't need to pull back to this zone, it can trade to the upside. Let me clean these things up. The price can trade all the way to here, and then later on it will continue or pulls back to tap into this zone right here. So don't try to force it to pulse back, okay? Go with expansions. Expansions, you can enter from anywhere, and it offers a good RR, right? A lot of times they are clean, explosive. Pullbacks are not the best setups to trade, okay? And I believe we are done. These are the 7 filters that I use in my own strategy, and it makes trading very easy for me. So I put it in another screen in front of me, and I'm trading on the main screen, and all I have to do is to take a look sometimes at it. Whenever I see a setup, I take a look at these 7 filters. If one of them can be applied to my setup, I simply don't take it. All right, so I don't have to think about it, use my mental energy every single time I see a setup. All I'm doing now is to compare, and that's it. Now, I believe that this is the end of this video. Again, in the next video, I'm going to give you examples. The next or the video after the next, I don't know, but I'm going to give you examples for each one of these right here, okay? And even if you don't trade my strategy, I believe that this one is going to really help you to enhance your own strategy, whatever you are using, right? And yeah, if you have any questions, DM me in my Twitter account or leave a comment down below, and I will answer you as soon as I can. Now, happy trading and good luck.